Hello and good morning, everyone. Welcome to yet another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about two main things. The number one is the historic rally in gold. So far, it's up 43.03% year to date, marking its best year since 1979. So we'll also be focusing on US equity indices and how they have made an impressive rally. So far, the SP 500 and the Nasdaq are trading very close to all-time highs. We saw new all-time highs last week as well as yesterday, which was on Monday, the 22nd of September. So we'll be trying to understand these rallies and how you can benefit from the strong momentum in these indices. And then once we cover these, we'll do some technical analysis, try to understand the prevailing chart patterns before we handle the Q&A, and then we end the session. So for those who are new and maybe you are joining here for the first time, you should know that this is a series that happens every day, Monday to Friday at exactly 11 a.m. This is your go-to place if you want to have an idea of what are the top events for the day, what are the prevailing chart patterns, and what are the assets that present the best opportunity to trade. So as always, this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So you can already see we have traders in the house. You can see Alfred Rotich in the house. Good morning, and shout out to you for being the first to join and comment. You can see Apollo in the house, Derry Mask in the house, and we already have quite a good number of comments. Robert Kavare, Rusinjo Oki, Justus Chalo. So let's jump straight to the economic calendar first and try to understand what are the key highlight events for the day. Just give me a sec. Need to update something here. All right. So today being Tuesday, the 23rd of September, we have quite a number of data points coming up. So among the most important ones are the S&P Global Flash Services and Manufacturing PMIs. So they started streaming in from the morning, and across board we have seen weakening in both services and manufacturing, especially in manufacturing sectors across different countries. So for Australia, manufacturing was at 51.6, which was below the previous reading of 53.0. Then services slowed down to 52.0, down from 55.8. But still, one notable thing for Australia is that both services and manufacturing are above 50.0, which is the midpoint between contraction and expansion. So this means that the services and manufacturing sectors in Australia are still in expansion territory. They have only slowed down from the prior growth. So today there's a bank holiday in Japan, so we expect little to no volatility coming in from the Japanese side. Then on the EU side, we had France being the first to report its flash manufacturing and services PMI, which both missed expectations, with manufacturing jumping straight into contraction, down from 50.4 to 48.1, now below 50.0, meaning that manufacturing has entered contraction in France. Flash services were at 49.8, and now we moved to 48.9. So clearly weakening in the services sector. Now fast forward to Germany, manufacturing came in at 48.5, slightly below the prior reading of 48.8, and still below the 50.0 mark, meaning that Germany is also contracting. And then for services PMI, there was a surprise improvement in Germany, coming in at 52.5, which was higher than the prior reading of 49.3. So for the entire Eurozone, data just came up at 11 a.m. So we saw manufacturing coming in at 49.5, indicating that the entire EU has entered into contraction territory in the manufacturing sector, down from 50.7 in the prior reading, whereas services improved to 51.4, way higher than the prior reading of 50.5. So this continually shows the problem with manufacturing activity in the EU. Mainly the contraction issue, which is basically a big red flag for the EU economy. So on the other hand, we'll be expecting the same data from the UK and the US. So for the UK, flash manufacturing and services PMI, we're expecting a slight slowdown in services to 53.4, whereas we expect a very minimal increase in manufacturing PMI. So for the US side, this will be expected at 4:45 p.m. We're expecting services to slightly slow down to 54.0 and manufacturing to slightly slow down to 52.2, but still both remain under expansion territory. So we know that the big guy in the market has been Jerome Powell, especially after the last FOMC meeting, where he decided to cut interest rates by 25 basis points, and the Fed dot plot basically showed a potential that the Fed could be cutting by another 25 basis points each on the next two meetings, that is before the end of the year. However, the other big guy in the market is President Trump. We know how much he has been influencing the movements in the markets. And today he's yet to present a speech at 4:50 p.m. So he'll be speaking at the United Nations General Assembly in New York. And of course, if he happens to mention things around markets, then we expect that there could be movements in the markets. So key focus would be on the Russia-Ukraine war if there is any developments. There will also be mentions of tariffs. So any mentions of tariffs would have a likely impact on the countries mentioned. And of course, he could be mentioning something around the US dollar and monetary policy. So investors will be on the lookout for that. So later on at 7:35 p.m., as I mentioned, the big guy, Fed Chair Jerome Powell, is due to speak about the economic outlook at the Greater Providence Chamber of Commerce Economic Outlook Luncheon in Rhode Island. Of course, we will be expecting audience questions, so this makes it more interesting, where his responses have the potential to move the markets. So those are the key things that are expected to be driving the markets today. Of course, the Bank of Canada Governor Macklem will also be issuing a speech. This will be at 9:15 p.m. The text of the speech will be released at the same time. So everyone will get the speech at the same time. And the faster you process the speech, the more you understand the concepts that will be presented in the speech, and of course, make the appropriate response. So other than that, tomorrow being Wednesday, September 24th, we'll be getting inflation reports from two economies, one from Australia, where we're expecting inflation to slightly tick up to 2.9% year over year. Then Bank of Japan core CPI, which is expected to slightly slow down to 1.9%. So those will be key reports before we get to the next market snapshot at 11 a.m. I'm sure the person handling tomorrow's session, that's Robert, he will be able to cover the other news for the rest of the day. So Thursday, the main event will be the SNB monetary policy statement and interest rate decision. We don't expect them to change rates, so we expect the interest rates to remain at the same level at 0.0%. Then the main event for the US economy will be the final GDP quarter over quarter, which is expected to remain at 3.3%. As we approach the end of the week, on Friday, we'll be focusing on Canadian GDP, and from the US side, we will be focused on the core PCE price index, which is the Fed's favorite gauge of inflation. So those are the key highlights that we're expecting in the markets. So other than that, I want us to focus on one specific post I had written earlier in the morning, and this is a market update on gold. As the title of today's presentation suggests, gold extended its rally into a new all-time high of $3,759 per ounce of gold. and that was this morning, taking its year-to-date performance to 43.03%, which is its best year since 1979. Gold is rallying due to expectations of Federal Reserve rate cuts and continued easing by other central banks. Lower interest rates reduce treasury yields, making non-yielding assets like gold more attractive. Investors have already poured a record of $85 billion into gold funds this year, according to Bank of America. So a weaker US dollar is likely to remain a supportive factor for gold, which is priced in dollars, for the rest of the year. The dollar index has already declined by more than 10% since the year started. So gold rally is also reinforced by a record investor and official demand. So official demand means central banks purchasing gold. We know that China has been on the forefront in buying gold, bullion gold, and as a result, created scarcity. So other than China, there are other central banks who have also been buying gold. And this time we are looking at a fourth straight year of central banks purchasing over 1,000 tons of gold. So this craze or hurry by central banks to buy even more gold is creating even more demand and leading to price increase. So at the same time, if you look at the ETFs, the exchange traded funds in China, they've had record net inflows where a lot of investors are buying more and more gold ETFs. And as a result, this is driving the demand higher. So geopolitical uncertainties, especially the Russia-Ukraine war, what was happening in the Middle East, and now the Trump's policies have also been a key contributor to the record rally we are seeing in gold. And there are projections right now, especially from the bankers, projecting that gold could potentially reach $4,000 before the end of the year. So we'll be looking at the chart shortly and try to understand what are the expectations in the markets. So other than that, there are other key issues happening in the markets. For instance, there was big news on Nvidia. So Nvidia stock jumps on $100 billion OpenAI investment as Huang touts biggest AI infrastructure project in history. So Nvidia stock jumped roughly 4% on Monday as the chip maker announced it will invest up to $100 billion in OpenAI as part of a new partnership. Nvidia said in its announcement that the partnership will allow OpenAI to deploy at least 10 gigawatts of compute capacity from the chip maker's AI systems to train and run the ChatGPT maker's next generation of artificial intelligence models. So the first phase of that compute capacity, utilizing Nvidia's upcoming Vera Rubin platform, is set to come online in the second half of 2026, according to the company. So second half of 2026 is literally just a year from now. So that being said, looking at other key updates, as I mentioned, we have more updates on gold. Wherever you look, everyone is talking about gold, mainly because it's the main performer this year. So gold is pricier than ever. Here is why experts see it rising even higher. So gold surged to a fresh record high on Monday. Of course, even today on Tuesday, it has gone into even newer highs. So gold prices have been boosted by several interconnected factors: geopolitical tensions, as we already mentioned, economic uncertainty, a weaker US dollar, and the interest rate outlook. Veteran bond trader Jeffrey Gundlach said last week he forecast gold would reach $4,000 an ounce before the end of the year, and said a 25% allocation to the precious metal was not excessive given the underlying trends. So gold prices climbed to a record high on Monday, extending a blistering rally that experts don't expect to end anytime soon. So what this means for investors: investors often acquire gold as a hedge against inflation, political turmoil, and economic uncertainty, and some investing experts recommend increasing exposure to the precious metal given current market conditions. Bullion, as well as ETFs tied to gold or to shares of miners, could provide entry points. The reason behind gold stellar year are plentiful and interrelated: central bank demand, a weaker dollar, Donald Trump tariffs, and interest rates all bear some responsibility and are expected to continue to support gold prices in the coming months. Central banks are buying gold despite the record prices. Conflict in Europe and the Middle East, as well as simmering tensions between US and China, have given central banks around the world reason to be major buyers of gold this year. According to the World Gold Council's 2025 Central Bank Gold Reserve Survey, 95% of central bankers expect global gold reserves to increase this year, and a record 43% forecast their own bank's reserves would increase over the same period. No respondents said they expected their reserves to decline this year despite record gold prices, meaning that central banks have said they are not selling, they will continue purchasing more gold, and that's why there's an expectation that the rally could extend beyond current levels. So there is more to this. I believe I should share the link with you guys in the comment section so that if you'd like to go through the articles on your own time, you are able to do that. So as we progress, I believe now we can look at one more update. Yes, there was the update on Samsung. Samsung shares rise to years high on Nvidia approval report. So Samsung Electronics core shares jumped more than 5% after reports its won approval from Nvidia Corporation for the use of advanced memory chips, which marks a breakthrough for the Korean technology leader. So you can see Nvidia making all this big news. First, a deal with OpenAI, and then a deal with Samsung. So this makes it one of the most valuable companies on earth. And with such deals striking that level of optimism in the stocks, then we expect that the Nvidia could continue dominating the chip sector for the next few years. So on the other hand, BYD's stock falls after report that Buffett sold his entire stake. So we know that the Chinese EV market has been super competitive with price wars happening between the top leaders, including Tesla, BYD, NIO, and many other manufacturers. And so far, that is beginning to hurt the bottom line of the companies. And now that the Warren Buffett reported that he sold his entire stake in BYD, then this is a vote of no confidence. And as a result, we saw the stock dropping by around 3.71% as per yesterday. So we could be seeing more developments this week, but not a very good sign when you see Warren Buffett exiting a particular stock. So other than that, looking at the Forex side, we know that month to date, the weakest currency has been the Canadian dollar, New Zealand dollar, and the yen, whereas the strongest has been the Swiss franc, the euro, and the Australian dollar, which have made significant gains against the USD. So as per the week, we are seeing the Canadian dollar still being the weakest, and the pound and the euro being the strongest in the market. And as for today, the dollar started strongly against all other currencies. It was the strongest, gaining against all others, and the New Zealand dollar being the weakest. But then now we have the pound beginning to rise, beginning to make some gains against the USD. So if there's two currencies to be considering for strength for the day, that would be the pound or the USD, whereas the weakest is the New Zealand dollar. Personally, I would go with the pound as a strong currency for the day. So on the commodity side, since the year started, there has been quite a number of developments. We all remember that orange juice was the best performing commodity last year. So this year, things are different. Platinum is the best performing commodity, up over 53.51%, closely followed by silver, which is up over 44%. Feeder cattle is up 36%. Gold is up 43% based on updated data. And then the worst performing commodities, orange juice, which was too expensive last year. Now it has shed some of the high prices. So now this makes sense why it would be the worst performing given last year's performance. So I'm trying to see if I have any more updates. Sorry for that. Yeah, I believe that's it. Those are the updates for the day. So now we can jump straight into some technical analysis and try to understand where the markets might be headed next. So let's check on some of the comments can see Kiama Muturi in the house. Habari njema kabisa inside. Good question from Apollo. FOMC, in addition to rate cut, continue reducing its holding of treasury securities and agency debt and agency mortgage-backed securities. Isn't this loosening or QT simultaneously? Yes, this is more of loosening. We are seeing the central bank basically giving back some of these assets. So, when they were buying them, they were basically trying to ease policy. So now they are doing the opposite. So yes, there is some form of tightening, but it's gradual. It's not the same way they were doing it. So remember, if you are trading in 2020, 2021, when the Fed cut rates to 0%, they became the buyer of last resort, meaning that they were buying all mortgage-backed securities that nobody was buying in the markets. They were buying all bonds that nobody was buying in the market. And in so doing, they were printing trillions and trillions of cash. So after holding onto these assets, they don't want to stay with them. They want to release these assets back in the markets, but gradually. So what the Fed has been doing is easing these assets back into the market, but slowly. So yes, it has some form of tightening, but I wouldn't say it's that big. So the market is really focused on the big moves in the in the bond yield sector. The main reason this is because investors are forward-looking. So after we saw the first Fed rate cut this year, that was on this month, September. If we're expecting even 2 more rate cuts, then that means that it will have a material impact on the valuation of bonds in the US. And as a result, you can already see yields rising, meaning that a lot of investors are dumping bonds and going for equities and safe haven assets such as gold. So I believe that's the dominant trend compared to the yes, that small tightening happening in the previously bought assets. So another one here, good comment, and thank you, Apollo. Bitcoin options show extreme positioning with biggest wagers below 95,000 and above 140,000 for month-end expiry. So yes, we have been seeing the VIX rising, or the volatility index rising this week. In this case, the markets are anticipating a higher volatility for the SP 500 in the near future. And as we have mentioned before, there's a very strong correlation between the Nasdaq, SP 500, and Bitcoin. So if you're expecting increased volatility, then that means that the implied volatility on BTC options will be much higher. So in this case, we should be expecting much bigger swings. And given that right now we're on a downswing, yes, the downswing could extend to, let's say, 100K, and then we get a strong bounce from there. So yes, when you see these biggest wagers being way far from the current price level, it means that the markets are expecting a much bigger move. So there's a request from Justus Chalo to check on Pound USD, Euro USD, and gold. Yes, we'll be doing that. So just checking all the top questions before I get into analysis mode. BLS preliminary estimate of the current employment statistics, national benchmark revision to total non-farm payroll from March 2025 is 911,000 or negative 0.6%. Markets didn't react that much. Why? So remember, this was a big surprise in the market. And when you say the markets didn't react that much, what do you mean? This was one of the reasons that the Fed considered going for a rate cut. So the rate cut was as a result of weaknesses in the labor market. And Jerome Powell was pretty straightforward with that. So that caused a big reaction in that Jerome Powell cut interest rates, and the reaction from a rate cut was the SP 500, the Dow Jones, the Nasdaq going into new all-time highs, gold breaking into new all-time highs, and the dollar dropping to around 97. That's for the dollar index. So yes, that report had a material impact in that it influenced the decision of the Fed. So that being said, let's jump straight into some technical analysis. Let's try to get some things done real fast. So this is the dollar index, and as you can see, this was yesterday's performance. So we started slightly bullish, retested the resistance, and then kept going down. Today has been an attempt to push higher, but it keeps failing, meaning that the dollar is still pretty weak. And now, if you look at major currencies, for instance, Euro USD, yesterday the euro was pretty strong, especially in the afternoon. This morning, after market open, there was an attempt to move higher, which eventually led to a weakening. But now it seems like the euro is getting some support from this level here, though the volatility seems limited compared to the prior days. So in this case, if I had to make an interesting decision, I would be looking for a potential extension of the recovery in the euro, where last week, for 3 consecutive days, Wednesday, Thursday, Friday, the euro was just losing to the dollar. Then Monday, we started with a very strong and positive note. So I expect Tuesday will be extending the bullish momentum. So in this case, even if you use the 5 minutes chart, you can already see the market is failing to form lower lows. So in this case, a potential push towards the day's high wouldn't be that bad. So I should be expecting to see this, especially in the New York session. Same thing as pound. Remember, I mentioned with the pound, I am more bullish. So while the current price action, and as I always say, you trade what you see, it seems like the pound is pushing back to the previous support. The idea is to still be scanning for bullish opportunities, since the pound has been one of the strongest currencies since the year started. So yes, we had a bounce here on Monday at market open. Then here we are pushing back to the same area. It's a key level support. So from the 4-hour time frame, you can see that we bounced along that area 3 times. And now if the market is looking to retest, then the idea is to be patient and look for evidence of buyers coming in around these levels. So for USD, here we are looking at a market that was extremely bullish. Then last week we had a bit of a sell-off, and now the market is trying to identify some level of support. So from the 4-hour time frame, you can see long tails on the lower side, indicating some form of rejection of lower prices. So from the daily time frame, you can see it's quite a chaotic chart, and from the 1-hour time frame, you can see that the market is in a range. And by a range, I mean that since Friday last week, and then the price action we have seen yesterday, it basically tells you that this market is literally moving sideways. So a sideways market is not usually the best to trade. So you want to wait for the market to finish consolidating and give you some form of impulse. Once you see some impulse signal, then you know the direction to trade. So in this case, with the correlations we see between the Australian dollar and gold, a break above this area would likely mean that we head higher. So we should be watching that closely, especially on the 15 minutes chart, waiting for the eventual break. So the strongest currency of the year has been the Swiss franc, and the dollar has been seeing dust compared to the Swiss franc. So yes, Monday, the Swiss franc was pretty strong. Today, the dollar has attempted to regain some territory, but you can see that this attempt to move higher is pretty weak, and at some point, we should be seeing the market dropping even further. So given yesterday's momentum, I expect that this could be extended all the way down to around 0.78719 price action level. So as for the dollar yen, I would say that this market has been in a range. And if you count the number of weeks, this is more than 10 weeks. More than 10 weeks of sideways momentum with several attempts to move higher, which eventually fail. So in this case, I would expect that the market stays within formation unless something changes. So in this case, a drop towards this area would be in order, around 146.308 as the target. So for the Nikkei 225 index, we saw the index breaking into new highs last week. And when you see a market pushing into new highs like this, then pullbacks are your gold mine. Whenever you see a pullback and you see evidence of buyers coming in, that's your gold mine. That's your entry. And you can already see them happening here, like this area here after this small pullback. Sometimes the pullback are longer than expected. This was like half a day. and then the market rallied for several days. Then we had the pullback that we experienced on Thursday last week with some form of liquidity grab here. And then immediately the market bounced and kept going up. So now we are looking at a potential extension of the rally. So we expect the Nikkei 25 index to continue pushing higher. For the UK 100 index, we are seeing more bullish momentum. So from the day time frame, it's still a very strong bullish momentum market. And then if I eliminate all this noise, you zoom out, you'll notice that this market is still attempting to push higher. So from the 4-hour time frame, you will notice that the previous high was not higher than the previous one. This indicates some form of weakening of the trend. And if you go to the 1-hour time frame, then you'll notice that for the last couple of days, we've had some form of resistance here, where the market was unable to break that resistance area for 4 days. And now it seems like we have a break in the house. So depending on how the candlestick closes, you'll be able to tell whether there is a break or not. And if we have a break, then we push on to the next level. Most likely the previous highs around this area, around 92.87. So a potential extension here. And that's for the UK 100 index. So looking at other indices, the US has had one of the best performing years on the SP 500, the Nasdaq, and the Dow Jones. So despite the big sell-off that we saw in March through to April, Liberation Day tariffs, what we are seeing here is a very strong momentum. So in the last I would say since the month started, we have only had 5 sessions where the market was negative and not conclusively negative. Can't say this on this day the price went really down. It was very short term, and then the following day we continued moving higher. So almost every single trading session has been positive for the UT 100 or the Nasdaq. So now looking at the 4-hour time frame, strong bullish momentum, and as I mentioned, pullbacks are your gold mines. So from the 15 minutes time frame, here we don't have a pullback. What we have is more of a flag, a symmetrical flag, where the market is moving sideways between one resistance area and one support area. So we will be watching out for a potential breakout. So in this case, a breakout would be much more in favor if it was to the upper side, because we continued trading in the direction of the trend. So US 30 is kind of the same thing. So after hitting a new all-time high, we are seeing more of a sideways momentum. So given yesterday evening's price action and today's price action, we can say the range is somewhere within this resistance area and this support area. So now we wait for potential eventual break, and once it breaks, we trade in the direction of the break. More preferably in the direction of the trend, which is bullish. So same thing for the SP 500. So we continue tracking this resistance area. That was yesterday's high. New York session low. You notice how the market went to this low towards the end of the day. And since then, we haven't broken out of that. So we remain in a sideways momentum. We trade when there is a break. So on the other hand, Bitcoin is finding some much needed support. I remember we talked about this break and expected the run to extend to this area, but the highest we got was around here. And this was around $17,603 per Bitcoin. So since then, we had a sell-off late last week. And then as we start the new week, we had even more sell-off. But then from the current price action, we are seeing more buyers coming in, grabbing some of these low prices. So I believe from the 4-hour time frame, what we are seeing as the current candle in the previous one is indicative of a strong entry by buyers. So we could be seeing a recovery boosting from here. So remember, this was the breakout point. So market makes a rally, goes back to the breakout point, and then it continues in the direction of the breakout. So now if you look at the commodities, in this case, gold, we already have a break in gold, especially from a cup and a handle formation. So for those who don't know about cup and a handle formation, it's a continuation pattern where a market meets a resistance on a strong bullish trend. It goes down in a U-shaped pattern, gets back to the same resistance, doesn't break, drops in a smaller U-shaped curve, and then once it breaks, you expect a continuation. So now we are seeing the push happening right now. So if I was looking for a trade for the day, then this would most likely be that trade. So in this case, we are seeing a very strong momentum in gold as it breaks into a new high. So even if you go to the 1 minute chart, 1 minute ago is when we just formed a new high of 37.66. We have never seen this price action level before. So it's all systems go for gold, as I mentioned, while we are waiting for the breakouts to happen on the UT 100, US 30, and US 500. Then I think it's a go for gold as it continues pushing higher. So that's it for the day. I hope you have enjoyed the session today. So remember to share this session. If you are watching on YouTube, share with your community of traders. If you're watching on X, like and share or retweet. We always appreciate when you share this with other traders. I think we already covered this, the reasons why gold is pushing to new highs. So if you missed some minutes at the beginning of the session, you can actually go back and rewatch. It's recorded live on YouTube as well as on X. So I already shared a post on FX Pesa as well as on my own profile. So I can see there's a question on silver. Silver tends to be strongly and positively correlated to gold, so we don't expect much of a difference. So while gold is going into new highs, silver is also doing the same. So far, silver has performed better than Bitcoin since the year started. And what we are looking at silver here is some form of consolidation and a potential eventual break. So if you do your 15 minutes chart, you zoom into your chart and then you look at yesterday's high, this morning's high, and then you compare between the different highs, then you'd notice that there is some level that is acting as resistance, and that should be your trigger point if the market breaks above that. Otherwise, you risk the potential of the market remaining within this pattern. But then if there's a break upwards, then that would likely signal further trade upwards. So that is it. Thank you very much, everyone. So remember, we have a new episode of the Bullish Banter podcast. So if you haven't been following, I know you have been missing a lot. You've been following. We appreciate all the feedback you can give us. Leave us a review on Spotify or your favorite podcast platform. If you're watching on YouTube, like and subscribe to the channel. Leave us a comment. We will appreciate all the feedback you can get. And as we mentioned earlier, we're opening the mics. So if you are a trader, you are experienced, you'd like to share your story, make sure to reach out to us. We'll host you free of charge, and then we'll get to talk about the markets. So in the latest episode, we hosted Gathoni, popularly known as Miss Gathoni. We had a lot to talk about trading discipline, gold breakouts, women in Forex, and everything else that we could discuss within the short period of time. So make sure to check it out. The last one was, or the previous one was Tell Us Okay. Make sure to check it out. And George FX Mastery. And I believe these are important topics that you will find valuable once you start getting into them. So lastly, the Bullish Banter community on Telegram. I'm still inviting you guys. So if you haven't joined yet, make sure to check the link in the description or in the comment section. And then we will be able to continue with these conversations. If you have any follow-up questions, then we're able to respond to those questions and then get to build together. So that's it for the day. Thank you very much, everyone, and I hope to see you on the next session.